All right, welcome everybody to another episode of Inspired Investing. My name is Christopher Cox, and I'm joined by my co-host Nicholas Marcano. Today, we're going to be discussing in episode two investment approaches and styles. There are two main investment approaches: passive investing versus active investing. They're two very different styles, and depending on what type of person you are, you will want to be one of those investors.
So investors can utilize several different styles when trading in the stock market. It is important to identify which style is best suitable or most suitable for your individual investment goals. Most investment styles seek to follow one basic principle of buying low and selling high. While that may be easier to understand, it is necessary to know the basic fundamentals of the style you select. You want to ensure you're carefully selecting a strategy to employ in your investment policy. So let's begin with active investing. Active investing entails frequent buying and selling activity in the short term. The short term refers to any period of time within a year. Active investing entails active rebalancing and reallocating to different investment securities based on your investment criteria, which is obviously to achieve the best results in the shortest period of time. Whether you're day trading or swing trading, it is important that you're aware of the tax implications that govern your investment style. Active investing is not necessarily the most tax efficient, since you're taxed not only every time you sell for a profit, but also at a generally higher tax rate as opposed to passive investing.
All right, so with that being said, we're going to move on to passive investing, which is the other side of the coin. It's a more hold for the long term and reap the benefits of the capital gains. Typically, you want to hold around 20 to 25 stocks or an accumulation of stocks and ETFs, exchange traded funds, which are baskets of stocks that you can buy, which will give you broad market diversification. You also want to pick some dividend stocks. It will give you a consistent dividend as long as you hold it. So that pretty much sums up passive investing. And
So the key component here, guys, is the market price. It is tremendously important since it directly relates to the level of return or profit that you can generate in the future. You always want to pay close attention and understand that the value of any investment you make is and always must be a function of the price you pay for it. So you always want to make sure that you're buying low and selling high. You're looking to identify undervalued and discounted stocks to enter into. If you think of it from a real estate standpoint, real estate investors never pay retail prices for properties. They are always in search for bargains or heavily discounted properties to either fix and flip for a profit or fix and rent to generate consistent cash flows in the long term.
we're going to be moving on to habits for success. In this episode, we're going to be covering Warren Buffett, his investment style, his mentor, and how he became the success he is today in the investment world. So he is an investor, CEO, and chairman of Berkshire Hathaway. He is a multi billionaire. His company, Berkshire Hathaway, has billions under management. And he got to the point he is today by making solid investments about companies he understood, and doing deep analysis on those companies. So one key strategy is looking at the PE ratio, and that is the price per share over the earnings per share. And what this does is it gives you a gauge on how cheap or how expensive a stock is. So he likes to buy stocks that are sub 15 PE, sub 20 sometimes, but a lot of his trades are not conducted by him anymore. However, he purchased Apple when it was a 10 PE ratio stock, and today it's trading north of 40 PE. So it's getting quite expensive.
So Warren Buffett credits a lot of his investment philosophy to his teacher, mentor, and friend, Benjamin Graham. Um, Most of you may know Benjamin Graham as the author of the famous book, The Intelligent Investor. He's usually referred to as the father of value investing, and this directly impacted Warren Buffett's investment approach and style. So as Chris mentioned, Warren Buffett advocates for critical analysis for stock selection. He reiterates that when you have purchased a stock, you have essentially bought a piece of that business. So you should be thinking as an owner. So that's been his approach, and that has definitely contributed significantly to his success. And we can only attempt to employ some of his decision making and his wisdom in our investment policies. So next, we're going to be transitioning into our trending globally segment. In this week's episode, we're going to be speaking briefly and generally on digital currency, Bitcoin, and sharing our personal views of the digital currency world.
I heard about Bitcoin in 2014 to 15, something like that. And ever since then, I've been keeping my eye on it to see its run up. The summer of 2017 is when it really caught my eye. It started gradually increasing, and into December of 2017, it had totally increased to around $20,000 mark. Since then, it has been tapering down, um, and most recently, I guess since November, it has been creeping back up, and it is over $700 billion market cap. By the time you hear this, the market cap will probably change one way or the other. We don't know. This applies to the investment in the business world because companies are starting to look at Bitcoin as a decent store of wealth, a good store of wealth. So companies are putting treasuries into Bitcoin as an alternative asset class instead of cash, instead of securities, instead of bonds. Um, Michael Saylor is one of the big advocates for companies storing at least 1% of their treasury in Bitcoin.
So we definitely see the potential that Bitcoin has, and not just Bitcoin, but the entire realm of digital currency. We definitely see the convenience to consumers it provides as a global form of payment. So we definitely understand the possibilities that exist around Bitcoin. It's something that we recommend paying close attention to before getting in on. But we do believe that as of right now, it definitely provides tremendous value as a store of wealth or as an alternative to just having cash. And as we've noticed in the recent months, we've noticed it being institutionalized where big companies are allocating their treasuries, as Chris mentioned, to positions in Bitcoin. So we definitely see that it is getting a lot of institutional support. So it's going to be a journey, and we look forward to seeing what comes of it. So this is it for episode 2. In this episode, we wanted to provide a basic foundation for your investment approaches and possible styles that you can adopt in your investment policy. We wanted to provide a few tips by Warren Buffett of his investment approach. And we also wanted to generally speak on the opportunity that Bitcoin presents to present investors.